Paper company Sappi swung to a second quarter earnings per share of 11 US cents. That's from their previous loss per share of 14 US cents year on year. The company cited good improvements on their European and North American businesses. Now, for a look at the numbers, Sappi CEO Ralph Boettger joins us on the line from London. Hi there, Ralph.
Thank you.
Good. We seem to have a reasonable connection. Ralph, when I look at numbers from companies and the turnover is down, but the earnings is up, it sounds as if you've done something right. Turnover down 13%, but attributable income up.
Yeah, I think we're also pleased with the numbers, and particularly because the improvement in results not on the back of improved market conditions. If anything, the market conditions were slightly worse than the year before. So it seems as if the actions that we've taken to lower our cost base and address our efficiencies are coming through now.
Well, let's look at those actions, because for a long time now we've heard about the European market where you are heavily exposed, and we heard talk of, you know, we've got to sit in there, that market's going to recover, and it's just not recovered, and your exposure has been big. So what have you done to fix things?
We've very aggressively addressed our cost base, our efficiencies, and the competitiveness of both our North American and European business. The North American business was about a year ahead of the European business in terms of those actions, and have been performing fairly well. In Europe specifically, we've reduced our cost base by more than $100 million year on year. We've aggressively also addressed overcapacity issues, and we are running full in Europe in a market which is lackluster. And as I said, cost base down a lot. We've also looked at our supply chain and customer service and interactions, and the combination of that has led to a much improved and more robust business which can produce reasonable results, we think, in tough market conditions.
Of course, the danger when you take strong cost reduction measures, you might cut into muscle. And of course, in hard times, people forget that good times might come back. So give us a picture of your operation in Europe in terms of what you said was overcapacity, now running at full levels. What's the picture? What's the landscape of the operation in Europe? And of course, the Eurozone crisis, how is that affecting what you do?
Yeah, it's a very good question. I don't think there's a massive risk of us cutting into, the bone and not be ready for a great upswing. First of all, we don't expect any massive upswing in the European economy in the short term, and even more so not for coated fine paper. It is a mature industry. It is an industry that will gradually decline in terms of demand. That we don't see as necessarily a problem, but then you're going to have to, and which is what we're doing, structure your business and position it for such an industry. We still are the market leader in Europe with about 30% market share for coated wood-free paper. We are now left with some of the most competitive assets in Europe, and I think that's key. And also the way in which we're interacting with our customers are on the basis that we can only do business if there's a reasonable margin for us in that. Looking at the landscape in terms of economic outlook, I think the next 2-3 years in Europe is going to be tough, and that if anything, growth will be lackluster. And for coated fine paper, we're expecting demand to continue to contract at about 2% per annum. That in that kind of market, we think we now are Sappi for the first time positioned to generate good cash and profits, given even such a prognosis.
Is it a fair question to ask whether you actually still have to be in the paper business? I mean, the end of paper has been predicted due to the technology that is available and changing all the time, making things easier to do things without paper. On the other hand, people still print things out I know that's not your fine coated paper market, but you have to start asking, as the energy companies ask, they're not in petrol or diesel or oil, they're in energy. Are you still in paper, and will you always be in paper?
We are certainly going to be in paper for many years to come. Yes, the market will decline, but there will always be demand and a good use for paper in certain sectors of media and advertising and other areas. But we don't see paper as the area where Sappi will see its growth. That's not where our investment is going in. The chemical cellulose business is clearly our growth area. We're investing heavily there. It's a great business with margins, EBITDA margins in the last quarter of 30% plus, where the paper margins are 5-6%. Paper, however, has been generating more than half our cash, and a third of that from Europe over the last 3-4 years. And we see that the paper will continue to contribute reasonable profits for many years to come and very good cash flows. But growth and the direction for investment and future growth is elsewhere.
Just finally, Ralph, your South African operation, of course, many South Africans think of you as a South African company, but you're not. You're a global company. You talk about your cellulose business continuing strongly, but broadly, what's your strength of the operation in South Africa and the prospects there?
Strength of the operation is twofold. It is our forests. We're the largest landowner and largest forestry company in South Africa with more than 300,000 hectares of planted operations. And secondly, it is our chemical cellulose business where we're the world leader, and that business is producing very, very good profits on a low-cost basis. We're investing now in Gondwana to expand that capacity in addition to the investment in North America. Our paper business in South Africa has been underperforming, and therefore we're doing the same what we've done in Europe to make it a more competitive business, and those actions should start benefiting us from the third quarter, accelerating into our fourth quarter. So the prospects are good.